In this video, I'll explain you how to calculate quarterly mortgage loan installments for different loan amounts and different interest rates. Here is an example where a company is contemplating to avail a mortgage loan ranging between 1 million and 5 millions. The company approached 5 banks and got different interest rates. Here are the interest quotes given by various banks. And the loan is for 24 months. So the PMT function that we use in Excel to calculate the installment. So first what we do is we calculate the PMT for one approximation. Then we will do it for different loan amounts and different rates of interest. So here we calculate the PMT for one term. So PMT is asking to give you the rate, and before that we give some inputs here, assuming that 100,000 is a loan amount and the annual rate is 6%, duration 24 quarterly payments. There is a 6-year loan. So here equals to PMT rate. So here we have annual rate, but whereas the installments are quarterly, so annual interest rate need to be divided by quarters. So we have 4 quarters in a year, so divided by 4. Then number of payments or periods, so we have 24 periods. Then what is the amount that you need to pay? That is 100,000. So we are putting a minus because we have to make a payment at the end of the term of the loan. So this we have simply calculated for 100,000. Actually our requirement is 1 million, or we can write the same formula here. So once you wrote a formula for or equation here, then immediately onto the right side of this in the same row we need to give inputs for different rates of interest or interest quotes given by different banks. So here 5 banks have given its quotes, so we mentioned 5 quotes here, and the loan amount ranges from 1 million to 5 million. So immediately where we wrote a formula in the same column, we have to mention the installment, that is loan amounts. So here is our formula. Onto your rights with adjacent cells we mentioned, in a row we mentioned interest rates, in a column we mentioned the loan amount. Now including this equation where we wrote, select the grid, select the total grid, then go to data, then what if analysis, click on table. So in a row input cell we have given interest rate, so click the interest rate, and in column input cell we mentioned the loan amount, so click the loan amount, then click OK. So here we got the loan amount. This says if you borrow 1 million at a 6%, you have to shed 49,924 per quarter for 24 quarters. Similarly, if you borrow 5 million at a 6%, you have to shed 2,49,620 for 29 quarters. So with the different interest rates and different loan amounts, we can make a schedule here. So based on our financial requirements and based on our cash flows, you can go for any loan amount from a bank or a financial institution. This is how we calculate mortgage installment schedules using Excel 2 variable data tables.